Hi everyone. Today we are going to talk about Bitcoin. Is Bitcoin a good financial instrument to invest? Is Bitcoin a good financial instrument to trade? Should you stay away from Bitcoin or should you be a part of the Bitcoin growth story? Hi, I'm Dr. Joe and I hope you all are doing great and welcome to this video. In this video, I'm going to discuss some very important features about Bitcoin. So if you're really interested to be a part of the Bitcoin growth story, then what you should really be doing, this video will surely help you in that. So let's look at some features about Bitcoin. Number one, why was Bitcoin created? Bitcoin was created so that there could be seamless transaction globally. Second was no government intervention. Third was it was digital. These were the basic features of Bitcoin when it was introduced. But that time the price of Bitcoin was $1, $10. So it was okay. But today we are looking at $1 lakh, $100,000. So you have to be careful when you're going to invest or trade in Bitcoins. So you need to understand today what Bitcoin stands for. Number one is the intrinsic value. Now, Bitcoin really does not have any intrinsic value because it does not produce anything, nor does it have any services which can be used by a lot of people across the globe. When I say services, it could be IT related companies, financial companies. And when I say production, production should be steel, automobile, and those kind of companies. Either the service industry or the production industry have production, have services. That's why they have a reason for the stock to go up. But when it comes to Bitcoin, that fundamental is missing. So this could be a red flag that you should be careful when you're thinking about investments in Bitcoin. Second would be whether a Bitcoin is backed by the central government of any country. For example, when we talk about currency trading, let's take an example of USD INR. The INR is backed by the Reserve Bank of India, whereas the US dollar is backed by the Fed, the Federal Reserve. So if the currency is becoming weak, the Reserve Bank of India and the Federal Bank will do something to make sure that the currency is getting stronger in comparison to another currency. Yeah, there are a lot of reasons why a currency becomes weak and why a currency becomes strong. There's a list of them like the GDP, inflation, employment, production. There are so many things. But at the end of the day, there is a system behind a currency. So again, Bitcoin cannot be compared to a currency because Bitcoin is not supported by any central bank. So again, that is another red flag that you have to check before investing into Bitcoin. Another important area that you have to look into is the regulators of a country. For example, like in US there is SEC, in India there is SEBI. Whether they are allowing Bitcoins to be traded and use Bitcoins for trading. In some countries they might allow, but in some countries they might not allow. Tomorrow the regulator might get up and say, sorry, we are not interested in allowing Bitcoins to be used as a financial instrument for transaction. Then what can you do? Because the currency of the country is different. So it's easy for the regulator to just stand up and say, sorry, we are not interested. So you have to be careful when it comes to that too. So that's another red flag area that you have to look before investing into Bitcoins. Another area that you have to be concerned is the risk of holding Bitcoin for too long in your wallets. Everything is digital. Digital hacking is something that you're hearing everywhere. The hackers are getting smarter and smarter every single day. So if you're holding Bitcoin in your wallets for a long time, that also can get risky because you cannot move it anywhere, make an FD out of it, or keep it in your bank where the security system is very, very strong. So that is another red flag area that you have to be concerned when it comes to investing. Competition in cryptocurrency. That is another area to be concerned about. There are a lot of new cryptocurrencies and coins and tokens coming in the cryptocurrency market with a lot of good features, services, financial services, insurance services. So that is another area of concern that some other token or coin might take over Bitcoin. That is also something that you have to consider. And one most important area that you have to look into while thinking about investing into Bitcoin is its extreme volatility. Let me just take you over to the charts and show you how volatile Bitcoin has been in the past. Now, what you have in front of you is a weekly chart of Bitcoin. When it started, Around in 2009, 2010, the Bitcoin prices were very, very low. I remember it was at $10 in 2009, 2010. And then approximately in 2017, it created a high, which people never expected, of approximately 19,300 or say 20,000. But without any reason, then the price fell down to 3,000. That means Bitcoin lost almost 85% of its value. From 20,000, it came to 3,000. 85% of its value was lost. And then Bitcoin again continued. After a few years, it started going up, 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 up. And in around 2021, it created a new high of around 63,000. Then it fell down again to 29,000. That means it lost approximately 52% of its value. No reason, but the value was lost. Again, the prices started going up, 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 up in 2021. That is October 2021. It created a new higher high of 68,000, almost 69,000. And then for no reason, again, the price plunged down and it created a low of 16,000. That means it lost around 75 to almost 80% of its value. No reason. Again, the price started going up. In 2024, it created a high of 72,000. And then the price fell down to 50,000, losing 33% of its value. Now the price has created a new high of $107,000. Now, if you look at what has happened in the past, a high, a low, a higher high, and then a lower low. So if it does the same over here, a high, a low, a higher high, and if Bitcoin repeats history again and loses 80% of its value, then price can come down to 30,000 or maybe even lesser. So what I'm trying to tell you over here is that you have to be careful. It's a great opportunity, invest and make money. But when a financial instrument loses and gains value only because of a greater fool's fallacy, that means when somebody is selling something at a higher price, somebody else is buying it at that price, thinking that the price will go up and somebody else will buy from me at an even higher price, then that is dangerous. See, even the stocks plunge. In the year 2000, the market fell down because of the dot-com bubble. In the year 2008, the markets fell down because of the subprime crisis. But for the market to fall down, there was a reason behind it. And for the market to go up, there was a bubble behind it. Some fundamentally people were saying that this is good, this is good, this is good because of A, B, C, D, E, F reason. But when some financial instrument just go up because the sentiments of the people are saying that no, I think this will go up, this will go up, this can be risky. What is good about Bitcoin, what I've been saying about Bitcoin is if you're going to trade in Bitcoin and you try to ride the waves that is there in the Bitcoin, then it is an extremely excellent instrument because when the price moves up, you can be in a buy. When the price comes down, you can be in a sell. So if you go to a 1 hour chart or a 4 hour chart, and if you look at Bitcoin, it's an extremely excellent instrument for trading. Let's have a look at that too. So this is a weekly chart. I will convert this chart into a 4 hour chart. There you go. So when you look at a 4 hour chart, you can see that when you trade with the trend, you are in the trend. As long as the price is going up, you exit the trend the minute the trend tells you that this movement is going to stop going in one direction. Go back. There are some area of consolidation where you might hit some stop losses, but you go back, you see this trend again. So if you look at Bitcoin in a 4 hour chart, you will see some area of consolidation, but when the market start moving, it will give you good trends. For example, this downtrend over here could make huge profits when the markets are falling. So friends, like I was telling, in Bitcoin, since the fundamentals are not very, very clear yet, it doesn't have any production, it doesn't have any services to give other than just cross-border transactions and using it for some purchases online. You have to be careful while investing into Bitcoins. But as I said, trading where you invest and you exit, you invest and you exit. That is good because it's a very, very volatile instrument. And volatility is a friend of traders. Every time the price goes up, you are in a buy. Every time the price comes down, you are in a sell. So I hope that this video has made it clear that when you are looking at Bitcoin as a financial instrument, what are the things you should consider? At the end of the day, it is your call. It's your money, whether you want to invest or whether you want to trade. I just felt that I should let you know what are the pluses and minuses of investing and trading in Bitcoin. Friends, if you really want to do something big in the markets, you have to spend time in the markets. You need to practice. You need to have a lot of patience and persistence with the market. And I always keep telling the markets are so dynamic. The only way you can succeed in the markets is keep learning, keep growing, and keep getting better every single day. Friends, if you love the way I'm creating these videos, please like and share these videos. And if you've still not subscribed to my channel, please subscribe to my channel because this really motivates me to create more such videos. So that, like you, there might be many others who want to learn trading and investing the right way. These videos will surely help them. Friends, that's all in this video. Thank you. Namaskar.